Next week, both the Reserve Bank of Australia and the Reserve Bank of New Zealand meet. Now, the RBA meet early Tuesday morning, and they're expected to keep interest rates on hold at 3.6%. In contrast, the RBNZ, who meet early Wednesday morning at 3 a.m. UK time, they're expected to hike interest rates by 25 basis points. Sorry, they're meeting on the 4th of April at 5:30 UK time. Now, they're expected, you can see, to hike by 25 basis points up to 5%. So we have those expectations set. Now, a couple of things to note. The seasonals for the Aussie-New Zealand dollar pair are really quite strong in April. If you just take a look at April, you can see it's the strongest month over the last 23 years for the Aussie-New Zealand dollar pair. So if we do see a very hawkish RBA decision relative to what's expected and a dovish RBNZ decision relative to what's expected, then Aussie New Zealand dollar longs do have a seasonal bias to the upside. You can see the Aussie New Zealand dollar pair at the moment is just trying to break out of this key trend line. So risk could easily be defined and managed underneath that 1.0650, and the obvious overhead resistance would be at that 1.0850, 1.0900 region around the 100-200 exponential moving average. All outlooks have risks, and this is no exception. The major trade risk here would be if the central bank decision between the RBA and the RBNZ plays out against this prevailing seasonal trend. So, if we see a central bank decision which contradicts the seasonal trend, then that would be the major trade risk. Remember, HYCM clients, they can access this SeasonX product in order to analyze over 25,000 different currency pairs, indices, commodities, as well as individual stocks. So please do contact your account manager for a free trial to get started right away. Certain products and services mentioned herein may or may not be available to all clients, depending on which HYCM Capital Markets Group entity their trading account adheres to.